Welcome back, everyone. Doug Burson here. Hard to believe tax season is on us again. It started up today, at least for us. Of course, this video, don't know what day you're going to watch it. But either way, tax season is live, and here we are. And so I wanted to go over a few housekeeping things with you, and then I wanted to get into some tax tips just to remind you of some key things for this tax season to make sure you don't forget some things that could cause delays in processing your return or could cause delays with the IRS, or maybe even trigger IRS notices. And nobody wants to deal with those, I promise you. So I want to go through some stuff. We're going to try to get to it pretty quickly, but really just continue to set the stage for this tax season. We did a video a week or two ago on the organizers, and I think that was very useful to you as well. But let's go ahead and start with that. And what we talked about last week was the portal. And if you haven't seen that video, go check it out. But the feedback so far has been wonderful. So I'm happy to hear that. It is so much simpler. If you used our old portal in the past and felt it was just too much, and so you see portal and you're like, oh, I don't want to do that. Well, give this one a shot. It's way easier. I think you're going to like it a lot more. Now, I understand not everybody likes tech, and that's okay. You can still drop stuff on paper, and we'll be glad to do that as well. But for a lot of you, this is going to make your life a lot easier. We also heard the phone system the last year or two has not been that great. So I listened to you on that. And we've also actually just today launched a new phone system. Had some hiccups, of course, as always. So if you tried to call today, sorry about that. But as of the 25th, I think it should be up and operational. That's January 25th. So by the time you see this video, the phone system should be working. We switched to this phone because it's much more robust, has a lot more that we can do with it. And one of the things that I really like is the ability to text. And I know a lot of you, we have a simple question to finish the tax return, but you can't talk to us because you're at work. And all I need to know is something simple. So now we'll be able to send you a text if that's the way you like to work. And you'll be able to text back, and that'll allow us to get that tax return done quicker. And that's what a lot of the stuff we've done the last year is try to find ways to make your life easier so we can get these returns back to you in a more timely manner and make your life easier and less stressful. And so I hope you really see a difference this year, because that's really what we've been working for. Now, some of you, we sent out the video on the organizer checklist, and that's not your thing, and that's okay. If you don't have the ability to print the organizer or checklist, or that's just not how you do things, that's fine. When you drop stuff off, we're going to have organizer and checklist at the front desk. You can pick one up. She'll be glad to give it to you. You can take it home, fill it out, and drop it back off in a day or two. That shouldn't delay your processing much. Just know we got to have it. There's just so much that's changed the last couple of years. So many little things that are easy to miss. And there's a lot of things that happen in your life that we just don't know, okay? We just don't know. Maybe you had a new child and you had one, but maybe we don't. A lot of little things. Just make sure you go through that checklist for me. Watch the video from last week. Once again, it goes over there how to do it easy, but we gotta have the checklist. We gotta have the engagement letters. It's just compliance in this new world. We gotta have it. I know it's a pain, but it is what it is. Also, I'll be honest, our parking lot the last few years has been a challenge. It's been very full. About one more week. My understanding is that's going to change, and we should have a lot more space. I don't want to say anything more about that, but just know that after February 7th, it should be a lot easier to get in and out. I think that's going to be a nice change for you too. We're looking forward to that. So just know that we know it's been congested, but starting in about a week or so, it should be a lot easier to get in to see us. Okay, so that's a lot about things for us, but now I want to start talking about things that I think will impact you. A lot of you may or may not know this, but the IRS is incredibly backlogged. I think we all know that. They got like 6 million tax returns they haven't processed, 5 million pieces of mail they haven't opened. They're just way behind. So we're going to try to do things to make sure that we don't have to deal with that. And that's where the questionnaire comes in, is to try to help on that level. And there's some things that we're going to ask you to do this tax season that we're going to be stricter on than we have in the past potentially, but it's to make your life better, because the last thing you want is one of these IRS notices. You just can't get a hold of them. It takes months to get it cleared up, and a lot of it is senseless. I know some of the stuff we're going to ask you may find annoying, but just understand it's in your best interest why we're doing that. And on that same level, it's been so bad that the AICPA, Paget, I know others have as well, have written letters to the IRS just saying, hey, look, stop sending notices to people before you even have time to process what's in. I don't know if it'll have an impact, but it's become a huge issue in the industry to where they're sending out notices before they even process what they've got. And they're getting you all worried about things that have already been handled. So just know that if you get a notice, it's probably okay, but make sure you let us know. If you got a notice and it's our fault, we're going to take care of it. If it's the IRS or something else, there may be a fee involved, but just make sure you don't ignore it. The IRS, they're just a pain to deal with. It's the new reality. It's not really, in a lot of ways, their fault, so understand that they're just backlogged like a lot of us, but we can't ignore it. So if you get a notice, let me know. We'll do our best to help, and we'll go from there. Now, with all that being said, e-file and direct deposit, as well as electronic payments, to be honest, I'm just not a big fan of mailing stuff to the IRS anymore. Too many things have gotten lost. It's hard to prove anything. If you pay the IRS electronically, you can prove you paid it, you can prove they got it, and it gets in their system faster. If you do it by mail, you could end up in one of those trailers taking forever to get things updated. So I know a lot of us like paper and we like to mail things, but the world's different now. And trust me, if the IRS wants to get to your bank account, they can get there anyway. So don't be afraid to do things electronically, at least with the IRS. It's just gonna make things better for you, in my opinion. And I also wanna, on that same level, if you get the earned income credit or child tax credit, just expect delays. There's so much fraud in this area that the IRS is gonna delay at least 2 to 3 weeks. So don't be surprised, just know it's coming. They've been doing it to us for the last couple of years anyway, but don't be surprised, they're gonna delay on those, and it just is what it is. But in the long run, it's the best, because if somebody's filing in your name fraudulently, the IRS wants to catch that before they just waste money. So there's a good reason for it, and I do support that. Okay, for those of you small business owners that got the PPP loan, if you applied for forgiveness in 2021 or received forgiveness in 2021, you have to let us know so we can put that on the tax return. The IRS is now requiring a statement be attached to your tax return that says that the PPP funds were spent on qualified expenses, that you've applied for forgiveness, or that you've received forgiveness. And we can't ignore this, because the IRS has gotten really good at matching. And so if you don't do this, guess what? You're probably going to get a notice in a year or two saying, hey, you didn't do what you were supposed to do. So this is that stuff what I was talking about earlier. You got to let me know, or let Cindy know, or whoever's talking to you on the tax return. You got to let us know so that we can make sure we put this statement in there so the IRS isn't bugging you about the forgiveness. Those of you who have children know that the child tax credit was expanded last year. Now, I'm not going to get into the details of that. We've covered that in the past. But what I do want to make sure you understand is the IRS is sending out a letter 6419, letter 6419, and they're sending that out in January. I have to have that letter so we can prepare your tax return, because it's going to say how much you got or whether you opted out. But we have to have that letter, because a part of doing the tax return now is we have to reconcile that. Just more stuff. But I have to have that letter. If you have a child tax credit and you don't bring those letters in, processing your tax return is going to be delayed. So we're going to need that. And it's important to understand that, one, if you're married, there's one for you and your spouse. Two, I got to have it. And actually, I just got mine, I think it was last week. So they are starting to send those out. Be looking for it. Don't throw that away. Don't ignore a letter from the IRS. It's going to be critical to filing your tax return this year. On that same vein, I guess if you want to call it that, there was also the stimulus payment in 2021, the $1,400 per person. The IRS is sending out letters in January again this month related to that. And that letter is 6475. Now, I haven't seen one of those yet. Here we are the 24th, and I still haven't seen that letter. But it's got to be out there, so hopefully we're going to get them soon. But we can't do your tax return until we have that letter, even if you only got a couple $100. Because one of the things we learned last year is on these stimulus payments, if you file the return and you don't get it exactly matching up with the IRS, your tax return is going to be delayed by weeks or months. So we have to have that letter, and we have to make sure it matches. So be watching for that letter and don't throw it away. Now, since we've just covered those two letters, it's a good time to talk about the IRS account. The IRS set up a new system in November that's supposed to make setting up your account a lot easier. I know a lot of you had a hard time the last year or two because their verification program didn't work well. And so a lot of you just weren't able to do it. Well, supposedly as of November, it's a much simpler process. And why this is important, what if the mailman just didn't deliver your letter? Or what if you moved, right? That's possible too, but you didn't get the letter. I haven't been in there yet, but I'm hopeful that they're gonna put those letters in there once they're processed. So look at that, go to the IRS, you can set up an account. There's a lot of good reasons to have one. You can verify the information that's being reported on you is accurate. You can make sure the IRS has copies of the tax returns. If they make adjustments to your tax return, you can see what they did, and also these letters. You can go in and make sure that if you didn't get it, hopefully those are going to be there. I can't guarantee that, but I'm hopeful they're going to be there. And just another reason to have that account. And it'll make it easier for you to work with the IRS, or if they send a notice, it'll make it easier for you to allow me or Cindy or somebody here at our office to help support you. Because if you have that account, it's then easier to add the power of attorney to give us the authority to talk for you, because you really don't want to deal with the IRS generally. So that's just another reason to set up that account. Now, last year, they also passed the infrastructure bill, and I'm not going to get into all the details of that because for the most part, it didn't impact us on individual returns, or really most business returns as far as that goes. But the one thing I want you to think about is cryptocurrencies, and we did a video on cryptocurrencies a couple weeks ago. If you were invested in those, and a lot of you were, I know a lot of you were, go watch that video, because basis and tracking gains and losses are going to be super, super important this year. It's going to be very messy, and you want to know how to deal with it. And there are some tips and tricks to make that easier for you. So check that out. But just know, one, you can't buy crypto with another crypto without creating a taxable gain. I want to make sure you understand that. And secondly, that new bill that I just talked about, there's a real high likelihood that starting in 2023, that they're gonna start making the brokers that are selling the cryptos report the basis. So I want you guys knowing that's coming in advance. We have a full year, but make sure you know what's going on. So like I said, check out that video. We'll probably do more on that later, but I just want you to know things in crypto are about to start being reported, which is a shock for a lot of us. Okay, we're getting close to what I wanted to cover here. Few more things. One is charitable donations. We know a lot of us don't have enough to itemize anymore because they've raised the standard deduction so high, and they bumped it to where you get $300 on the front page. Well, this year, if you're married, you can deduct up to $600 of your cash contributions on the front page of your tax return, even if you can't itemize. So don't forget about your charitable contributions. If you're in a 25% bracket, that could save you a chunk of money. What's that, $150? I mean, it's not going to change your life, but every penny counts. So don't forget about charitable contributions, even if you don't have enough to itemize. So let me know about those, and we'll try to make sure you get credit for that. And I also want you to know about the student loan forgiveness. That's been in the news a lot. And for those of you who that actually did impact, it's not taxable, but don't forget to tell me about it. Because if I can put it on the tax return for you and show that it's non-taxable income, once again, we're avoiding that IRS notice, we're keeping your life simple, and reporting it right up front. If you don't report it right, chances are they're going to see forgiveness of debt income, which under general rules is a taxable event, and you can get a tax bill. But if we report it right, it can keep the IRS from bugging you. So if you had student loan forgiveness, don't forget to let us know. It can save you from getting a notice down the road. Okay, employee retention credit. We've talked about that a lot. Our business clients are pretty aware of it, but some of you don't work with us except for once a year, and maybe you've missed that. So the main thing I want you to know is the employee retention credit is a massive credit, or at least potentially can be. So if your revenue was down in 2020 or 2021, and you have employees that you paid during that time frame, go back and watch one of our videos on the employee retention credit. There could be a substantial credit there. We've had hundreds of thousands of dollars for some clients, some just a few thousand. But if your revenue was down and you had employees during 2020 or 2021, go watch those videos, see if it qualifies. And if you think you're close, let us know. We can help you get that calculated because it could be a big, big deal. And I want to make sure you don't miss out on what could be a massive, massive boom for your business. All right, and the last thing I had that I wanted to talk about tonight was meals and entertainment. Entertainment, think Chiefs games, and hey, that was a good game. But Chiefs games or Royals games or whatever, golf, those things are not deductible anymore. But what is deductible are meals, business meals. So think you're taking out your favorite accountant, that may be a deductible meal, and for 2021 and 2022, that's 100% deductible, whereas in the past it was only 50%. And that was to try to help some of these restaurants that took a beating during COVID because they were closed. And so it's just a 2-year deal, at least for now, but they're 100% deductible. And so I want to make sure you're aware of that. So maybe some of you who just don't bother to track that, we'll take the time to go back through and pick up those receipts and let us know. Just know you got to know who it was with, why you did it, the basic stuff. But that became a much more attractive deduction. And if you thought that that was out, it wasn't the meal portion. It was just the entertainment portion. So I don't want you to miss that. So that's all I have for you guys tonight. I'm looking forward to a very good season. I think things are getting better. Look forward to talking with you and doing whatever we can to help. And go Chiefs. Talk to you later.